Depends on which way you're facing.
6:30, and I'm going to call this meeting to order. Please, to order. Welcome to the regular meeting of the Board of Directors of Joshua Basin Water District for Wednesday, December 6, 2017. Please rise and join. Alex, you want to lead the pledge?
Sure. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Determination of the quorum.
Director Luckman, 4 of the 5 Board of Directors are here, and Director Johnson has an excused absence. You have a quorum.
Thank you. Item number 4, approval of the agenda. Do I have a motion to approve the agenda?
Make a motion.
Okay, is there a second?
Second.
We moved and seconded to approve the agenda. All in favor, say aye.
Aye.
Aye. And Director Johnson's absent, so it's 4 ayes. Public comment. This is the time set aside for public comment on any district-related matter not appearing on the agenda. Government code prohibits the board from taking action on these items, but they may be referred for future consideration. Please state your name and limit your comments to 3 minutes. Do we have any? Yes. Mrs. Tracy.
This is
Name and city.
Karen Tracy, Joshua Tree Ratepayer. I'm here speaking on behalf of the entire CAC. We had a meeting today, and this is just a report back. We were in consensus that the Citizens Advisory Committee believes that the projected rates with scenarios 2 and or 3, which you'll get a rundown on tonight, were what we believed best for the district. The consensus reflects only 4 of 6 members. There were 2 members absent. And that's my report.
Thank you very much.
Any questions?
Any questions for Karen? Seeing none, Mr. Marquez.
Al Marquez, Sunfair Community. This is comment on well 14. Well 14 has almost been out of order since July of 2016, January of 2016. It's almost been 2 years. And an enormous amount of money to rehabilitate that well is quite a bit. And as of now, the well is still not online. And I would hope that the committee members that on the Water Resources Board or Committee have some kind of a comment tonight and give the community information about why that well still hasn't been rehabilitated and why they're spending so much money on it. Thank you.
Thank you. Any other public comments? Yes, sir.
Ed Vallerin, owner of multiple properties here within Joshua Tree Water District. Several weeks ago, Kurt came out to Copper Mountain Mesa and told us about the pending raises, and I decided to look in. It seemed sort of high to me, and I decided to look in to understand it better. So I've got a handout that you've all got that I pulled data from publicpay.cal.gov on the cost of Joshua Tree compared to 29 Palms. Now, 29 Palms, their chief financial officer doesn't show up on that, but I pulled her contract, and she gets paid $72,000 a year. So 29 Palms cost is $72,000 higher than what this papers reflect. But 29 Palms with twice as many meters cost over $300,000 less than Joshua Tree. And I was trying to get some handle to understand it. 29 Palms has 8,000 meters, Joshua Tree has 4,000. The stuff I'm told on the miles of pipe for both 29 and Joshua Tree is incorrect, but that's what your websites reflect. So the last page of it has a comparison of the number of wells, reservoirs, storage, etc. And 29 Palms, as I see it, is considerably more. 29 Palms reads their meters by hand and records it down. They don't have an electronic system, so I would have expected their costs in the finance area in particular to be much higher than Joshua Tree, but it's not. And so I'm giving you that data, and on that data, please add $72,000 to the cost for 29 Palms, because that's what they're paying. They're paying $6,000 a month for a CPA to handle their accounts, and I like it because they use what's known as the WBS system, work breakdown system, which 29 Palms, the city does, and all the people that does business with the government uses, so I can readily pull financials and look at it. I was a manager and went through the roasting myself back in '79 for the first time with a government audit to justify all my costs. And I question the cost in here. I think that there should be some cost cutting that is done within the district as well as a raise of rate, and that might cause the rate to be increased just a little bit less, and thank you for your time.
Thank you, and I understand you were at the CAC meeting today. Thank you very much for attending that. And you're meeting with the general manager next week, is that correct?
He's going to give me a call, because
Wonderful.
I've given him, he needs time to digest the stuff, and so when it's convenient for him, he'll notify me.
Excellent, thank you very much. Anyone else? Mr. Tuttle?
Kirk, please keep me in line.
You're
First, I
asking
want to
Kurt? I'll
commend,
keep you.
yeah, Kurt's good at it. I want to first commend Joshua Basin Water District on all of the different proposals, and looking at what I've seen today from the CAC committee and the report that Alex gave, I just think it's great that you guys are looking at it, and I think 2 or 3 is wonderful. Just wanted to say that. The other thing, I don't know if the board's ever looked at, but I'm a multiple parcel owner, and I get 3 separate mailings with the teardrop return envelope with my bills, and I don't know if the board's looked at possibly, hey, they all go to the same P.O. box, same name, and just doing like the state of California does, is that, like when I get my tax bill, I get all of my parcel tax bill in one mailing. 2 return envelopes because of the 2 separate times, but the bills come in one envelope, and I don't know how much cost savings it would be, but I think it would be something to look at to maybe save a couple of dollars. The other thing, and this kind of goes on what Kurt's going to be talking about later, I'm all in favor of the new meters. We've got a problem, and I understand that. In Kurt's group, you guys are working on it. As a property owner, though, I've had instances where I get a water leak, and luckily so far, knock on wood, I've been there. When it's happened, it's not hours or days, it's minutes. I would like to see, if possible, with the new meters that your group is looking at, if a homeowner like myself, I'd be willing to contribute to a meter on my property that would incorporate a flow rate meter, so that if the thing, I know from my own draw, I'm one of those 20-plus units folks a month. So I understand that and whatever, but the point is, it would be nice to have a meter that I could shut off at 748 gallons, because I know I don't draw that much at any one time, and it would save water, save me money, and also save the district. And as a homeowner, I would be willing to help contribute to that, just something that I would like to put out to the board. Thank you.
Thank you very much. Anyone else? Yes, sir.
That's a lot more cost. A lot more.
Yes, my name is Rand Kidman. I'm in Copper Mountain Mesa. I have a dozen properties up there. I have 5 beaters that I'm paying for. 2 of which are inactive. I'd like to know if I can get one of them moved from parcel 18 to parcel 26. It's actually only 2 parcels to the east of where it is now. The parcel 26 has got a really nice brick building, and I'd be able to, develop it very quickly. It would be better for the district and for me, of course, but the district would be able to make money off it right away, rather than 27 or 25.78 that I pay every month. That's basically it. I've spoken to Kurt about it, and I've given him my tax form, show that I own the property is free and clear, and they're both 2.5 acre parcels. And that's basically it. He said I might be able to speak to you and get a variance or something on it.
Okay, thank you.
That's all I have to say.
This is when you can refer to me, I'll bring it back to the December 20th board meeting if you want.
So we'll look at this at the December 20th, excuse me, we'll look at this at the December 20th board meeting, and Mr. Sauer will bring it back to us at that time.
Okay, so I appear at that meeting?
Probably, yes, if you want to hear the discussion and see what the outcome is.
I'm going to write a quick letter and hand it to you if I could.
Okay, great. Any other public comment? Seeing none, we will move on to item number 6, consent calendar. Matters on the consent calendar are considered routine in nature and will be enacted in a single motion without discussion. Any board member or member of the public may request that an item be removed from the consent calendar and acted on separately. Is there a motion for the consent calendar?
Make a motion to approve the consent calendar.
Do I have a second?
Second?
All in favor?
Aye.
Aye.
Any opposed? Anyone in the public wish to pull something? Seeing none, it stands. And it's the minutes of the November 14th special workshop meeting and then the November 15th regular meeting of the board of directors. Okay, item number 7, nomination of Gail Austin to the Citizens Advisory Committee. Mr. Sal.
Okay. So we are recommending that the board appoint Gail Austin to the Citizens Advisory Committee. As you know, the CAC reviews important issues and makes recommendations to the board. We're supposed to have between 6 to 12 members. We currently have 6. Gail has expressed an interest in being on the CAC. She first came to the area in 1959 when her father was stationed in 29 Palms. She attended school in 29 Palms School District. She returned to the area in 2012 with a vision of creating a home and a business in Joshua Tree, as well as becoming an active member of the community. She and her husband own a home in Joshua Tree. They also operate a commercial business called Ink and Steel, as well as a vacation rental, so she's a business owner as well as a resident. Gail has attended board meetings. She learned about the CAC during the district tour that she volunteered to go on. Since then, she's attended several of the CAC meetings and has expressed an interest in becoming an active member of the CAC. She's also attended the rate study meetings of the CAC, as well as several board meetings discussing the rate study. Karen Tracy and I have met individually with Gail, and we support Gail's nomination, and the rest of the CAC members also support her nomination. That's our recommendation.
Okay. Do you say anything? Okay. Do I have a nomination for Gail?
I move that we nominate Gail Austin to the Citizens Advisory Committee.
Do I have a second?
Second.
And we'll take a roll call on this, starting at that end.
Definite, yes.
Yes.
Oh, most definitely, yes. And I can just say, I've seen Gail at many community and county meetings as well. An active participant, understands all kinds of the ins and outs of many issues out here. You contribute, and I'm so happy that you want to be part of this as an advisory council. Thank you, Gail.
Excellent, so it's unanimous. Welcome to the advisory committee.
Yay!
All right, we will move to item number 8. Review of the fiscal year 6/30/17, ending 6/30/17, audited financial statement. Chris, it's up to you.
Thank you very much. Oh, thank you. Let me just get the, either way. Oh, there you go. Perfect. Okay. Well, thank you very much for having me. Again, my name is Chris Brown. I'm a partner with Keith Brown. I'd like to go over the results of the 2017 audit. Kind of give you a view of the engagement team, the process, and then finally the end results of the audit. The audit team was made up of myself, I'm the engagement partner. Mr. Charles Fedak is the technical reviewer, and that position basically is charged with ensuring, after my review, that all the accounting practices are properly being applied and reviewing the financial statements themselves. Mr. Jonathan Abadesco was the manager on the engagement. We had another manager out here assisting him, and that was Mr. Andy Beck. And Mr. Alec German, he was the audit staff on the engagement. A little bit about myself. I know this has been asked in the past. The area, Riverside, went to Cal State San Bernardino. I've been doing this for approximately 20 years with various firms. Started out with McGladrey and Pullen, which is RSM now. It's a very large firm. And basically became a partner, the new firm, Fedak and Brown, 2 years ago. So this is my second year as a partner on the engagement. And Chuck's been doing this forever. He's been doing this for 40 years. Okay, as far as the audit requirements, why do you have an audit? State law requires that the district have an audit. It needs to be performed each year by a qualified CPA. There's a new legislation, and it talks about rotation of the lead partner. Basically, what they want to do is make sure that no partner is overseeing an audit engagement for longer than 6 years. Okay, so typically what you do is you're required to rotate a partner off the engagement for a year or so, and then if you wish, you can rotate that partner back on. But that's the rule now. Okay. As far as the audit report itself, it needs to be submitted to the state auditor controller. So I would imagine you're going to send it to your county as well, but it must be submitted to the state's auditor controller, and a separate report is prepared that basically has all the financial results submitted to them. In addition to the state, you can see that your report is going to be distributed, among others, to the county. LAFCO, it's the formation organization. It takes a look at the various agencies and their effectiveness. Mojave Water Agency, local wholesaler, the banks, the lenders, and such, the bond rating agencies, your attorney, of course, and the general public. Whoever requests a financial statement from you should receive one from you. What is the audit? Annual audit of the district's financial statements is to determine whether the financial statements are free of material misstatement and that they are prepared in accordance with generally accepted accounting principles. So basically, what I'm doing is I'm looking at your financials, testing all the records on a test basis to ensure that they're presented without material misstatement. That's what we are doing. Okay? And of course, that you're reporting in accordance with GAAP, which is generally accepted accounting principles. Okay? What the audit is not designed to do is to detect fraud. I get that question a lot. However, the auditor does consider the control risk, fraud, when planning and conducting the audit. What that essentially means is that, like I said, we're not necessarily auditing for fraud. That's a totally different type of audit altogether. But we assess the control framework, and we determine the areas that there might be risk of that, fraudulent transactions and such. And we design our audit programs accordingly to address those issues. Okay. Other types of audits, they include audits of internal controls, okay, forensic audits, which tend to be more of like a fraud audit. Forensic being if there's a situation with a specific situation that calls for a very in-depth audit of that particular transaction or types of transactions. That's a separate type of audit that can be performed. The audit process itself, who's really overseeing it? What are the rules that we follow? The audit process is governed by basically the AICPA Statement of Auditing Standards, American Institute of Certified Public Accountants. They're basically the oversight committee or organization, I should say. And basically, we get our guidance, the auditor, from AICPA in the audit standards. Other auditing standards and guidelines, federal and state. It depends on which state you're in, and local requirements and federal requirements based on the type of audit as well. So we follow all the requirements for the state of California. When we're preparing a single audit for federal grants, we follow what's called Yellow Book, which are standards set by the federal government related to single audits as well. I mentioned GAAP, Generally Accepted Accounting Principles. And GAAP is established by the Governmental Accounting Standards Board, in your case. Okay? It's basically the standard practices, how to deal with certain transactions and how to report on those transactions. If, as the auditor, we come across a situation where you're not recording a transaction or reporting in accordance with GAAP, we would not be able to provide you with an unmodified opinion. Unmodified opinion is considered to be a clean opinion. We don't have to change it to account for something that's outside of GAAP. As far as the audit itself, we tend to break it up into two time periods. Interim field work, where we assess the internal controls and the effectiveness, gain an understanding of the district's control framework. It's basically how you do everything, and how you're doing it. We test the controls by looking at the various accounting cycles, your revenue cycle, the whole process of, we don't actually get into the meter reading, but basically taking the readings, seeing how it goes into a bill, how it's calculated, are the rates appropriate, all the way through the deposit of the check into the bank account. Purchasing and disbursements, are purchases properly authorized, all the way through the disbursement of the check to a vendor, has it been properly handled? There are several others, I won't go into detail on those, but basically that's what we're doing when we're looking at the processes there. Final field work, at that point, we have received the trial balance or the accounting records. Okay? And what we're doing at that time is we're tying those numbers, like account balances, your capital asset amounts, things like that. We're agreeing it to the supporting documentation. See if there's substantiation for those numbers. In addition to that, we're performing analysis of key relationships. Transactions of a certain type are going to affect one area as well as another area. It's double entry bookkeeping, essentially. So what we see, when we see additions or deletions in capital assets, we're going to see corresponding changes in other areas. We're looking at those relationships to make sure that they make sense. When it's all said and done, there are essentially two reports that are issued. The district's annual financial report, which contains the auditor's opinion, and the management report, which is the auditor's communication to you. You're my boss. So I need to communicate to you any issues that we've come across, if there are any, that you should be aware of. Slide says, basically, we did not identify any material weaknesses. So I'm communicating to you that they look good. We did not come across any material weaknesses in the control structure in 2017. So congratulations. The management report reflects that as well. In addition to that, the management report also deals with our responsibility. Basically, these are little paragraphs that basically spell out what our responsibility is. Plan scope of the audit, qualitative aspects of accounting practices, agreement on how you're applying the rules, management's judgment and accounting estimates, any corrected or uncorrected misstatements, management's consultation with the accountants. We want you to be aware if we find that there's been some outside communication. There again, you're my boss, I want you to know. Difficulties encountered in performing the audit, there were none. It went very smoothly. Disagreements with management, there again, we had no disagreements conducting the audit. The auditor's opinion. In our opinion, the financial statements referred to above present fairly in all material respects the financial position of Joshua Basin Water District as of June 30th, 2017. That is in the financial report, so there again, congratulations on an unmodified report. Pardon me, I've been doing a lot of speaking today. Kind of loose. Okay, oh boy. Do you mind if I wander a little bit from time to time?
You
Okay.
definitely can walk.
Let me just come up here real quick. Okay, I'm not going to spend a lot of time on this, but essentially what you can see is, this is the condensed statements of net position. And what that is your assets and your liabilities. In this case, it's aggregated amounts. We don't have like cash separate and accounts receivable. Everything's kind of grouped into their larger components. So what we can see is total assets increase from one year to the next approximately 524,000. I'm going to round some numbers here. Okay. Deferred outflows of resources increased by approximately 165,000. That relates to pension liability as well. Okay? That's not the liability, but it relates to that. Total liabilities, we can see it increased approximately 255,000. Deferred inflows of resources, there again, in your situation, that relates to the pension obligation. Since there's a time lag in the application of amounts paid on that liability, that's the reason, that's what gives rise to these deferred inflows and outflows. Net position, that bottom category there, that represents essentially your net worth. Okay, and it's broken into this situation, two components. One is what you've invested in capital assets. It's going to be the value of your capital assets, pipelines, tanks, things like that, less any debt that you might have on it. Okay. The bottom item there is unrestricted, and I pay more attention to that than anything else. What I'm typically looking for is a positive movement in that number from year to year. In your case, we have that. We see an increase of approximately 135,000 from the prior year. Bottom line, we see total net position of 37,114,993. Okay, probably when you're more interested in as far as the numbers go, condensed statements of revenues, expenses, and changes in net position. It's your profit and loss. Okay? And there again, this is aggregated, so we've got all the revenues combined together, expenses and such. And from this, you can see total revenue increased. I'm going to look at my cheat sheet since I can see it a little bit better. Actually, I'm going to look at the bottom line number first. Okay, let's start with that. Net position. Net position, which is the very bottom there in 2017, increased approximately 567,145 to that 37,114,993. Total revenues, kind of bouncing back up to the top there. Total revenues is made up of your operating revenues, which is basically what you do for a living, selling water and such, and non-operating revenues, things like tax receipts, things like that. You're not in the business of collecting taxes, so it's considered to be non-operating. But you can see that your operating revenues increased approximately 422,000, primarily due to increases of 221,000 in water consumption sales. And you don't have this detail, my little cheat sheet here. It's in the financial statements though, so you can easily see that. There again, primarily due to increases of 222,000 in water consumption sales, 213,000 in water service charges, which was offset by an actual decrease of approximately 67,000 from the High Desert Medical Center revenues coming in there. Non-operating revenues, it basically changed about 41,000. I didn't want to make too much of that. It's fairly copacetic between the categories from year to year. The next area there is expenses, and there again, it's aggregated. Total expenses, including depreciation expense, it decreased by approximately 736,000. But I tend to look at it a little bit, not just total expenses, because I threw in depreciation in there. Depreciation is not something you affect every year. It's not like the results of operations. It's basically what you put into the ground in the case of capital assets and depreciating it over its life. So what I tend to like to do is look at the operating side of it. Okay? Operating expenses, and this is excluding depreciation, like I said, decreased approximately 506,000 from the prior year, primarily due to decreases of 642,000 in pumping and transmission charges, 111,000 transmission and distribution, and that was offset by an increase of approximately 192,000 in general administration and approximately 55,000 in customer service expenses. So, this is the trend I'm looking for, is seeing increases in your operating revenue, decreases in your operating expenses. So we're going in the right direction. And again, going to the non-operating items, they've decreased by approximately $71,000. The last item there is capital contributions. They're typically made up of grants and capital contributions, like the developer contributions or capacity fees. And we can see we saw a $359,360 additional capacity charges in grants as compared to the prior year. Bottom line, change in net position, which is third number up from the bottom there, $567,145. So it was a positive year. So what do we take away from all this? I just threw a lot of numbers at you. Kind of the big picture is the audit went well from procedural standpoint. We had no issues with regard to the application of accounting principles. I can report to you that there were no material weaknesses. Results of operations is that we saw positive movement in your balance sheet. And we also see positive results with regard to your condensed statement of revenues, expenses, and changes in net position, ending up with a change in net position of that $567,000. So, very good. Very good. So basically, that's my presentation, and if you have any questions, I'll try to answer them.
Thank you very much.
You're welcome.
Any questions from the board? Director Arthur?
Yeah, what would be a material weakness? You said we didn't have any, but what would be a material weakness?
A material weakness would be a situation where a misstatement, either due to fraud or error, of a material nature, and materiality is determined by the auditor. Okay, it would be a situation where there is a lack of a process whereby, there again, an error or fraudulent activity would not be discovered. There's a high likelihood that it would not be discovered. I want to use the correct language because there's material weakness and significant deficiency and then deficiency. A material weakness is one that if there was an error, nobody would catch it, essentially, because either the system is not in place to catch it, or personnel without the experience to identify that, or certain review procedures would not be in place. That would be a material weakness. If we came across one of those, we'd bring it to management immediately, and it would come to you shortly thereafter with regard to those types of weaknesses.
Thank you.
Okay, Director Hunt?
Well, first of all, I want to say that you, without a doubt, are the best dressed person in here tonight. and you look very sharp, so, and I appreciate that. I have a couple questions that might be more properly directed towards staff about this, but we'll see. On the drop of $642,168 in pumping production and treatment, what's the primary reason for that?
Gary, what page are you on?
It's in my notes, sorry.
Could you repeat that? Because I might be able to. Was that the $642,000
Yes.
decrease in
Yes.
operating expenses?
In pumping production and
Yeah,
treatment.
I do have a note here that basically there was a decrease from the prior year of approximately $277,000 related to recharge costs.
Oh, okay.
And I also have approximately $275,000, and I'm kind of rounding here, related to a reduction in repair and maintenance from the prior year. So
Okay.
those are the two big items. There's some other ones that are not huge, but these make up the bulk of it.
Perfect. And then the second question is about grants receivable going from $150,000 in 2016 to $339,000 this year. That's good, and I was curious as to, which grant funds created that.
Well, at year end, that would be our Chromium 6 planning grant.
Okay, I
So
had a feeling
a
it
bill that
was...
we'd sent out that we
Right.
hadn't yet collected from State Water Resources Control Board.
Okay, great, thank you.
Okay, Director Flum?
Just one of my semi-annoying observations. I've noticed on page 64 of 92 and 65 of 92, there's a block of text there that seems to be duplicated. I was wondering if that was on purpose or not. This part and that part are exactly the same. I was wondering if that was, I'm not an audit expert, so I'm not sure if this is appropriate or not. It might be, for all I know. This is exactly the same as this right here.
Oh, okay. Took me a second to, he's referring to the management report.
Yeah.
And in this situation, what we're doing is, there's a comment from the prior year and a comment from the current year. It's the same comment, and for anybody who doesn't have it, basically, whenever there's a journal entry posted during the audit from the original trial balance, that comment is a standard item. It's basically, and it's for you, is to say that there were some journal entries posted to the original trial balance provided to us. And it goes on to say that in the normal course of the audit, these can be perfectly acceptable. And the duplication is simply because last year there was that comment, and in the current year that's comment. What we need to do is we need to bring forward those comments from year to year to make sure that they're rectified, essentially, is the reason it's duplicated. So I guess, long story short, it was intended to be that way.
Okay.
Sorry.
Any public comment? Yes,
Yeah.
please stand up. We'd like to get you on the tape, and so that microphone doesn't amplify, but it is caught by the recording. Thank you.
A couple questions. I had earlier in the meeting today brought up WBS, work breakdown structure. Isn't that the GAAP-approved method of accounting?
Actually, you're taking me out of my realm. Actually, essentially, the accounting that we go by is GAAP. And as far as any specific, what was the name again? What was the call?
WBS, work breakdowns. That's everything I've ever done with the federal government, the city, the 29 pounds, those are...
That's a term that I'm not familiar.
That's an accounting issue. Wait.
If the methodology is within the GAAP framework, that's what I would be familiar with. Maybe it has a different name that I'm not familiar with. I'm not familiar with the federal side.
Okay, and on a second question, I was looking this, your last thing down here on the operation expenses. You have that the general administration increased by 191, almost 192,000, and customer service by 55,000. That's about a 15% cost increase in 1 year. Does that seem normal?
It can be. It depends on, most of the time when you see increases in that area, and I'm just speculating right now, it can be the addition of certain personnel and the benefits that go along with it. I would have to defer to...
I think that's exactly what happened.
Okay, thank you.
So we had some temporary or employees that had terminated, and that, so we had partial costs in a prior year and then full costs in the next year, sort of a thing.
Okay, I was just trying to get at what I had said earlier, the, $300,000 difference. Thank you.
Okay, Mr. Marquez.
Question I have is on the financial highlight index here, the unrestricted net position, is that the cash on hand?
No. What that represents is, what he's referring, okay, the net position. Let's see if we can go back to this real quick. What he's referring to is that bottom category where it says net position there. And what that really represents is not only cash, it represents the net worth. Okay? It's your assets minus your liabilities. What's left over. So within that unrestricted number there are going to be several things. It's going to be your cash, it's going to be the value of your receivables, it's going to be the value of prepaid items, it's going to be basically assets, I want to say this right, the value of the assets that are not being restricted in some other matter. For example, your capital assets, that's being separately shown because it's important to show that. The unrestricted net position is the value of your assets over your liabilities. And there again, what makes up that number can be, it's definitely your cash. It's going to be receivables, it's going to be your prepaids, it's going to be your inventories and things like that. What you're not going to see in there are your liabilities necessarily. That typically, for you guys, your liabilities, and I'm kind of going way off in this direction, I'll bring it around here. Your liabilities in your situation are generally tied to your capital assets, so you're not going to see your liabilities buried in that number either. But to kind of come back to try to answer it is, it's more than just cash. It's the value of your assets that you have basically to run the organization. You have amounts invested in other items. You have amounts that are invested in inventory and such. It's included in that unrestricted number. The cash, I can tell you here. Pardon me, just 1 second. Okay, on page 7 of the actual financial statement, you'll see that cash and cash equivalents for the district at June 30, 2017 is $9,016,902, which is an increase from the prior year of approximately $8,203,685. So, kind of tried to answer that the fastest way I could. I'm not quite sure I was successful, but does that kind of make sense?
Thank you. Thank you
Okay.
very much.
All right.
And I really do thank you, and I would like to give a hand to Ann, who was the one that put this together for us. Very good. If there's nothing else, thank you very much.
All right, thank you very much.
So, Madam President,
Yes, sir.
we need the board to
Yeah.
accept and file.
Oh, do I have a motion to accept and file?
I'll make a motion to accept and file the report.
Do I have a second?
Second.
It's been moved and seconded. All in favor?
Aye.
Any opposed? It's unanimous, so we have accepted and filed the report. Thank you very much, Chris.
Thank you very much.
If I may,
Yes.
Ann is due more than just a thank you, honestly. Hundreds of hours of her time go into this audit process, this final product, and I really need to acknowledge that effort that she goes to. The audit takes months of effort and coordination with our staff, our auditor, as well as some third parties. Ann works many, many extra hours to produce the audit within the required timeline. You've got to have it by a certain date, and they've got schedules that they have to meet. Then when she's done, the auditors review her work and they bless it and produce their opinion. So the district is extremely fortunate to have Ann on staff. I am privileged to have her on my team, and I really can't say enough about her and the integrity and the value that she brings to the district. So I had to say it.
We could not agree more. All right, with that, we will go to talk about the rate study. So I'd like to introduce Alex Handler. We've met Alex before, he's been here before, so welcome back, Alex.
Thank you, nice to see everybody again, and boy, I hate to keep going over my stuff time and time again, it's been a little boring. And, sometimes we go over a little more than being new people in the crowd and stuff. I'm going to try to keep it pretty brief and just kind of cut to the chase. So I think we've kind of come through our process. I think it's been a great process working with your Citizen Advisory Committee and the board. Initially, developing financial projections, looking at the rates, figuring out where rates need to go under different scenarios, honing those scenarios, and coming up now kind of towards the end of this initial part of the process with what are the proposed rates being recommended for going into the Prop 218 notices, and that would be the next step. So I'm going to skip over a lot of this. I'm going to defer to the board and just kind of cut to the chase, if that's okay, and if there's any questions, or if anyone, I think most people from the audience here, almost everyone, has heard this in some form or another, including at today's Citizen Advisory Committee. We had some folks there as well that heard kind of the 10,000-foot overview of the details.
I'd like to say one more thing. I do not think we'll make a decision tonight on this because Bob Johnson is not here and this is his baby. This
Sure.
is the thing he's most interested in, so I think that I just want you to know that this is all for information. We will not be taking a vote tonight.
That's okay, and you don't even need to take a vote on this because there's no action that gets taken on rates till the actual Prop 218 hearing.
Okay.
So I think what would come next then, hearing that, is there is a recommendation coming out of the Citizen Advisory Committee process for the rates we're going to propose tonight, which are very similar to, we call them the phased approach, whether it's scenario 2 or 3. In my mind, those are the rates are the same under each. But that's what's being recommended from the CAC, and that's what we have rates for. And you don't have to make any decision tonight, but at some point before January 5th, I'll say, is kind of the drop dead date when the Prop 218 notices have got to be in the mail by the end of that week. The board would need to make some decision as, hey, these are the rates we want to put in there. But anyway, you're familiar with your financial challenges with aging infrastructure, water supply, chromium-6, that's being kind of deferred for now for future evaluation, not in this rate study in the next 5 years, and obviously cost inflation built in there as well. The scenarios have been revised very little bit from what's been there before. We've got the best management practice, do everything that you should be doing, fully fund capital, $2.5 million a year based on your engineer's assessment, bring in 1,000 acre feet of imported water each year, et cetera. We got scenario 2 now. Minor tweaks to that are from last time. I think the desire was to put be a little more aggressive in phasing in the imported water from Mojave Water Agency. So whereas in the past it only went up to like 700 acre feet over 5 years, this time it goes up to 1,000 acre feet over 5 years. The rates really haven't changed. What's happened instead is that increment of money has come out of capital instead. So really, when you get these rates, you're going to have a pot of cash. It's not going to be enough to do everything you want according to the engineers and everyone else, but you're going to have the flexibility each year through your budget process and your expenditure process to determine where do you want to target that money. Do we want to put more towards importing water this year, or hey, this year we're going to put a little more towards capital projects, et cetera. Again, the 5-year scenarios, they're not, for scenarios 2 and 3, it's the phased approach, kind of a reduced rate approach that takes major steps in the right direction, doesn't get you to the full end line, but in the next 5 years, things are going to come out a little differently than we currently project, and you always have the ability of reevaluating and resetting course next time down the line. But this is going to take, big steps in the right direction. It doesn't get you to the mountaintop, but you'll be in much better shape with these proposed rates for scenario 2, 3 under the phased approach. One thing Kurt wanted me to make very clear, that the district has accumulated some fund reserves in recent years. Some of it's been accumulated, anticipated to be spent on capital projects that haven't yet been funded. So these scenarios assume while we're phasing in rates, you're also drawing down fund reserves, especially the first 2 to 3 years when fund reserves would be, the fund reserves that the auditor just talked about include not just water fund reserves, but you also have sewer fund reserves and customer deposits and other things, connection fees that are, some of them are untouchable for the water rates and don't really apply. When we looked at the fund balance reports, I think you had about $7 million in change, somewhere in that range. And what this phased approach is doing is it's drawing down reserves by about $2.5 million over the next few years. So you can help fund part of your meter replacement program and capital needs, et cetera, while you're phasing in rates. And at the end of the day, we didn't want those reserves to go down below prudent minimum levels. So for purposes of this study, we have a reserve target kind of built in equal to 50%, about 6 months of operating and maintenance costs, plus $1 million for additional emergency capital reserves. This is in line with what a lot of other agencies have. Do some have a little bit less? Yeah, some have 90 days O&M plus something, but certainly many others have more. One of the common misconceptions out there, and I'll just mention it because I hear it every place I go, is that, hey, we don't need rate increases, we can just spend down the fund reserves. And you think you could. If you did no rate increases for 2 years, you can spend down your fund reserves, but year 3, you're still facing the same costs you under each scenario, so then you have to make your rates go all the way back up. So the value of drawing down fund reserves, if you've got any spare fund reserves, is that it enables you to phase in the rate increases a little more gradually while still accomplishing some of the key objectives you want to take up. And the other big thing, less rate increase now, more later. We've seen that historically, the district had very low rate increases. We know you've been phasing them in over the last 10 years, kind of some small annual rate increases to try to gradually bring the revenues back in line, which is good. But because of less in the past, it means you need more in the future, and that's kind of the stage we're at now, where you do need a bump up in rates. And what's being adopted now doesn't get you all the way there, but the more you do now, the less you're going to have to do on the next go-around. Unfortunately, it's a never-ending cycle, is what tends to be the case in 90% of almost every agency. All right, scenario one. This one is the do-everything approach, and that would require rates to go up by about 150% over the next 5 years. You'd get to $2.5 million per year of capital funding, et cetera. Then we also, to put it in longer-term perspective, yes, it's a big rate increase over 5 years, but if you were to spread it out over the last 20 years, it works out to be about an average annual rate increase of 5%, accounting for all the years of low rate increases and now years of higher rate increases. Just trying to put it in perspective. That's not what's being recommended. What's being recommended is the phased approach, the reduced rate approach, where you're taking steps in the right direction, and they are substantial steps, and they are substantial rate increases. They're just not as high as doing everything, so there's still some additional potential rate increases on the table for the future, and who knows what happens with Chrome 6 down the line. So these rate increases, it's about a 90% rate increase phased over 5 years. 18, 16, 14, 12, 10, it looks like there's more rate increases on the front end than the back end, but there's really not, because they keep compounding, so it's roughly the same rate increase in dollar terms each year. Some of the changes that were made to the rate structure from last time, we went kind of through a cost of service analysis, and there's always a little flexibility there. It's not an exact science, but you try to be fair and try to come up with something that's defensible at the end of the day with your cash flows and with your rates. So we came up with rates that were very close to what had been shown in the past. Those were kind of preliminary. The rates are a tiny bit steeper in terms of the tiers, which is along with what people wanted, but it's very close. So at the end of the day, Tier 4 is about 73% higher than Tier 1. I'm just mentioning that because I know there was a target suggested of somewhere in the 75% range. So we're getting there, but we're doing it gradually. This is nothing extreme or out of line with what other agencies are already doing. It's just taking gradual steps each year with the rate increases and with a gradual steepening of the tiers for those who that apply to. And we can see at the bottom of that blue section, show the impacts. Right now, a low-use customer using 3 units pays about $35 a month. At the end of the line, it's going to escalate to about $60 a month. So that's about a $25 increase over 5 years, average about $5 per month each year. So it's not insignificant, and someone who's using, you got a lot of folks at that level, a lot of them on fixed incomes. A lot of people can't afford rate increases, but by the other token, you can't afford to have your system deteriorate and not have water. So hopefully this phased approach represents an acceptable balance to the community. It did to the Citizen Advisory Committee and hopefully to the board as well. Now when we move on, the rate increases that were being proposed, yes, it's a bunch over the next 5 years, even under the phased approach, but you look at it long term, it's less than 4% average annual rate increase, which is, for water wastewater agencies, it's just a little bit higher than inflation over a 20-year period. Here's the same chart showing for the low user using 3 units. I know there's a lot of consideration for folks here who are on the fixed incomes and keeping their water use as low as possible. And we can see that over long term for a low user, their rates increases average about a little over 2.8% per year over 20 years with these rate increases. Unfortunately, right now we're facing the uphill portion of it. Scenario 3, exact same rates as Scenario 2. At one point, we've been looking at the potential for using debt service as a way, does that mitigate the rate increases? And maybe it is if you had a big spike of capital projects to do in the near term, but the nature of your capital program, this is really a long-term program that's going to roll out over a number of years. The district doesn't need a $10 million infusion year one. You can't even do that level of projects unless you had to bring in, a lot of outside contractors, consultants and stuff. But we just wanted to show that the debt can have a positive place if you can get some state revolving fund loan financing that's below the inflation rate. If you can get some grant funding, principal forgiveness associated with that. But the rates that are being adopted do support a limited amount of debt financing, more than $5 million. So that's something else that would be kind of a discretionary future item, just as where you're opting to spend your resources, capital, water supply, et cetera. You also have the policy discretion that, hey, if we did want to borrow debt, if it was in our best interest to do so, these rates certainly support that to a degree. Water rate structure, right now the average usage charge is about a half a cent per gallon. It goes from $3 to $4.50 for the tiered rates, $3 per 100 cubic feet to $4.50 per 100 cubic feet. So that's about a 50-cent difference between the tiers. And that's one thing that came out of this process. One of the changes of the rate structure was, hey, let's gradually steepen the differential between the tiers, spread it over 5 years. That helps keep the cost down for the lowest users. And it also gradually ratchets up a little more conservation incentive on folks who are using a lot more. Now, someone who's in the middle, it's a balance. They're getting, some units at a lower rate, some at a higher rate, so it doesn't really make any difference to them whether it was a uniform rate or a tiered rate. At the higher end, though, those folks are going to see a little bit higher rate increases than they otherwise would have had the tier steepness stayed exactly the same. And there were folks on someone on your Citizen Advisory Committee who is a high user, who has a number of people living at their premises, and they have outdoor landscaping and pool, so they supported this as well as being reasonable. And the only thing I'll say about it is, for someone who is using a lot of units of water, they have more capacity, I generally believe, to cut back on their water use than someone who's only using 2 or 3 units. And in a aquifer here, I guess, where your groundwater basin is slowly being drawn down, not a bad thing to limit the amount of water being pulled out of the aquifer each year and try to keep it as stable as possible. And the other change in the rate structure was the fixed charges. Last time we had targeted fixed charges to recover 40% of the rate revenues. Right now they're about 46%. So under the proposed rates, the fixed charges are targeted to generate 40% again. So a little bit less increase to the fixed charge, a little more on the volumetric side, and a little, gradual steepening of the tiers over the next 5 years. Here's what the proposed rates are on this slide here. Again, very similar to what we showed last time for the phase 2 or 3 under the phased approach. This time the difference is that, tier 1's a tiny bit lower, tier 4 a tiny bit higher, and what we're looking at is the differential from the tiers going from about 50 cents between the tiers to $1.50 between each tier as folks gradually use more and more water. And at the end of the day, the average water quantity charge for, not including the fixed charge, just the usage charges, is increasing from roughly half a cent to, almost a cent per gallon, if we want to put it in what does it cost per gallon terms. And the reason people's bills are a lot higher than, 5 cents or 10 cents is we use a lot of water. Even folks who are conserving, there's a lot of water that gets used throughout the month. So we're kind of at the end of this process here. I'll just reiterate again, a lot of thanks to the Citizen Advisory Committee and to staff and the board. It's been enjoyable working with this district. Everyone's real friendly and nice and helpful, and it's got a real great attitude. Sitting around, roll up the sleeves, say, let's dig into this stuff. We had a lot of good conversations all throughout the process. Your Citizen Advisory Committee did a commendable job weighing through this stuff. Today we didn't have quite as much to talk about because we'd already hashed through a lot of stuff at the prior meetings. But yeah, that's where we are now. We're kind of at the end. There's the proposed rates. I guess will be out there pending the board's next steps on what they want to put in the Prop 218 notice. And even then, there's no action until February 21st. That's the target date for the Prop 218 hearing. I think the next step from my mind is we're going to draft up a Prop 218 notice similar to what was the last time. And Kathleen weighed in on it and added some stuff to it, make it a little more user-friendly at the end of the day. And we'll put some charts and things in there that have been talked about that the Citizen Advisory Committee, I think, wants in there as well. And that'll come to the board for, I think, informal review, comment, et cetera. And then you've got until the latest is about January 5th, which still gives you a couple days to spare, but I think that's a Friday, so you want to get your notices out by the end of that week in order to have the 45-day waiting period before February 21st. That is the date at which you'd have the public hearing and consider the proposed rates. And again, the board cannot exceed anything that's in the Prop 218 notice. They can always adopt something lower, but you adopt less now, it means more later. And the other thing is, this board, I think, is familiar with, even once you have the rates adopted, they are subject to change and review. You just can't exceed what's there. And I know on the prior, maybe it was 2 rate studies ago, there was a certain set of rates that were adopted, and instead of phasing it over 4 years, I think the district, 1 year, hey, we're doing okay this year, they cut the rate increase in half and spread it over 5 or 6 years instead. So you always have the flexibility to do stuff like that. And that concludes, I think, my presentation tonight. Open it up to questions and comments.
Okay, we'll start actually, any questions from the board, Director Unger?
I'll wait.
Director Hunt?
No questions. I just wanted to thank you, Alex, for your hard work and also for being responsive to the board and the CAC and my suggestions in particular. I'm really happy to see a more aggressive approach to groundwater recharge. And also, I think steepening the top tiers a bit is a good thing, and I think you did it in a fairly conservative, reasonable, by a fairly conservative, reasonable amount. And I think there's 3 benefits. One is, you mentioned a couple of them. There's a greater incentive for conservation. It'll help people on fixed incomes a bit to have some of that cost shifted to the higher tiers. And I also think that it will help ensure that the folks that are using the Tier 4 water pay their proportionate share of the cost, because as you, in one of your first drafts, presentations, you created a graph showing that Tier 4 is used by 8.1% of our ratepayers, and yet that equals 19.5% of our residential use water. So that's a substantial amount of our water. And then if you consider that the folks that are using Tier 4 are also going through the other 3 tiers on their way to get there, that means that 8.1% are probably using 26% of the total water that is used by, I'll call it residential customers, not commercial customers. So anyway, thank you very much. I'm really pleased with how this process went, but with staff, the Citizens Advisory Committee, the board, with you. I feel like we've all worked really hard to get to a place that balances between what our needs are to address our long overdue capital improvement needs, and yet at the same time be sensitive to the realities that people are facing out there in their everyday lives as families and ratepayers. So thank you.
Thank you. Director Flum?
My fundamental concern here, and everybody can chip in on this, is that these rate increases are sufficient to address our problems in a timely way. I forgot when it was, 3 weeks ago or something, we were at the farmer's market booth sitting there, and a lady comes up and says, oh, there's a leak over there on Park, right in front of the little cafe there, bubbling out of the ground. And then I go over there and I take pictures and stuff, which annoys staff, I suppose, but anyway, I do it. And so I go back finally, and I just sit down and show the video, and somebody else comes up and says, oh yeah, there's one up on Sunset, I think it was Sunset. There's one up there on Sunset, there's a crew up there right now working on it and stuff. So it gave me the sense that there's a priority to this stuff. And I know the capital improvement plan draws this thing out over 20 or 30 years, whatever it is, 2040 or something. And it is prioritized. And I just want to make sure that there is a judgment made that this amount is sufficient to address the problems. Because occasionally you hear, yeah, we were going to do this and we were going to do that. They talked about it a lot. This is what the ratepayers would be saying. And nothing ever happened, or the money disappeared into the general fund or whatever the heck it was. And Director Hunt just talked about how when we do this, when we vote for this money for these increases and they start happening, that we get reports on progress on fixing our problems. A solution is not a solution if it doesn't properly, proportionally address the problems. And if we think that, as you say, this is drawn out over time, we'll be able to do that. Okay, I'm good with that. This part about the $5 million borrowing bond, whatever it might be, in scenario 3, I thought to myself, well, these two and 3 are in fact identical, except for this $5 million loan thing. And then I thought, well, we can always borrow $5 million in scenario 2. But is that going to interfere with Prop 218? Is it, they're going to, in other words, have to go through another rate process because we borrow the money and have to then pay it back?
Oh, no, not at all. I think it would just represent a change in how your dollars were allocated. So either what the 5 million would do would enable you to front load more projects and get them done quicker. So you're getting 5 million of projects at the expense of having this stream of debt service that goes out a number of years. So it wouldn't impact your Prop 218 because you're still, it's just, you're going to be paying a little bit of debt service. So in a future year, instead of having, $1 million for debt service, you might only have, $800,000 for debt service, $200,000 has to go to debt repayment. I know those aren't the exact numbers. So it's just you have a certain amount of pot of cash you're going to be able to spend towards capital, debt service, meter replacements. If some of that's going to debt service, it's a little less you're going to have for other things. By the same token, you're getting to do some more projects in the near term, but no need to go through a Prop 218 process again for that.
Good
The rate
question,
supported,
Tom.
yeah.
So they are essentially the same thing, except, Kurt?
Just a clarification for those folks that are going to be watching this on YouTube. Alex just said if you had 100, or had $1 million for debt service and you had debt service, so if you had 100, you had $1 million for capital improvement infrastructure, but now you have to pay $250,000 for debt service, you're only going to have $750,000. Just in case people are watching this on YouTube.
And finally, Madam President, I'm looking at in the one we got in our brain book here, this is all available on YouTube again through the district's website. And I'm looking at page 75 of 92, line 50. I won't comment about all that. That's the Morongo Basin pipeline debt reimbursement. It's $220,000 a year until we get to year 4 of this, or year 5 of this process, and it drops off to 0.
Yes.
Is this the one that's on the property tax?
No.
No,
No?
this is our share.
And it'll be paid off by then. That's the payoff date.
That's the payoff date. So in other words, ratepayers will be relieved of the burden of paying this $220,000 a year. And so they will be getting something going the other way, hopefully, on this in year 4.
I mean, I have to think that Mojave's going to put some sort of charge in place because they're going to have to maintain this infrastructure. You know, I'm guessing it isn't going to be of this magnitude, but I can't imagine that it's going to go to zero. You know, I mean, none of this has been worked out yet. They are still going to incur costs that someone's going to have to pay for that facility.
Well, a comment on it, at this amount of money relative to buying 500 acre feet, this is like buying a Lexus to drive to the mailbox. If we, you know, the voters have approved all this stuff. And it would just be nice if we bought more water and used it. Get our money's worth out of it, so to speak. Thank you, Madam President.
Yeah, and I'll get mine on. And that was a good question, Tom. Thank you, certainly. We were at Aqua last week, the big, one of the bi-yearly conference, and low-income water rates was a big concern for everybody. And so Aqua, they are an active, Association of California Water Agencies, of which we are part of, they are an active participant in a couple of bills that are coming through our state legislature. There's a Senate Bill 263, which is a proposed statewide tax on drinking water to fund safe drinking water solutions for disadvantaged communities. And also there's a California Assembly Bill 401, which is low-income water rates. They commented that 34% of Californians are at 200% of the poverty limit. And 100% for an individual is about $16,500 a year. 100% of that would be a family of 2 to 4, be $24,000 a year. And they noted that water rates had increased 40% since 2010, but yet half of the water agencies don't have any low-income rates. Now, Aqua, they vehemently oppose SB 263, the statewide tax on drinking water, and everyone is actually really opposed to that. But they are working with the State Water Resources Control Board, and they have a panel of water agencies on AB 401, which is the low-income water rates. They did note that they could find no water districts that actually wanted to be like the qualifier, the income qualifier for these things. They said there was no appetite for that. But they do think that there could be compliance, could somehow involve the state tax board, creating a special fund that, to qualify and rebate low-income users, or that, you know, our people who have gas and electric bills, there's also, they also have low-income rates. They could use that to qualify water users, or some of their aid, like, you know, people have CalFresh benefits or other kind of benefits. So there really is, it's a concern. When you look at 34% of Californians at 200%, so 200% of 1650, what that's 33,000 a year. And so when we look at our rates, and like Tom says, what are we going to give the people for those? It's really important, and especially the discussion about debt, and Bob needs to be here for that. But so do our ratepayers. I mean, for us taking on debt, even a small amount, $5 million, that's still something that our ratepayers need to know about. It's like the family discussion, you know, who's taking out the loan or the debt or something. So thank you, Alex, so much. I mean, there's a lot of moving pieces to this. And I don't think we can count on the state to come up with something in any kind of timely manner.
No, I mean, the state is working on, you know, kind of like a low-income discount program, how it could apply on the statewide level, and there's a lot of alternatives. And you're right, a lot of agencies, they don't want to have to look over your tax returns, so they just say, hey, if you qualify for that PG&E CARE program or the Southern California Edison CARE program, you're good. If you qualify for this,
Yeah.
you're good. But this may be a while in the making before something like this comes through. And the other thing is, yeah, this rate study is, there's no, we just threw the $5 million there just to show you what's possible, but there's no borrowing that's associated with any of what's being proposed. That'll be in the future, if an opportunity arises, that'll be a consideration you can make at the time, whether it makes sense to ever do that or not.
Thank you.
Thank you. I think that, as Tom was saying, one of the things that's most important is that we actually are generating enough money to fund the things that we must do. Because, you know, you can't keep kicking the can down the road. I've been on, several boards that have done that, and I'm not proud of it. You can't do it. You have to maintain your system, otherwise you're getting no water at all. And it's a really big concern for those of us who are sitting up here and having to make the decisions about what we're going to do. I will now open it to the public.
Madam President, I'm sorry, a couple of things the other director said prompted some thought, additional thoughts, so if you would, thank you. Sure. Well, first of all, I forgot to mention that I appreciate the clarification regarding the drawdown of the reserves and how much we would have in reserve, how you factored that in, what the numbers are, so that gave me a greater comfort level, knowing how much we would draw down and how much we would have in reserve. Once we drew that down, at what year would we have that replenished or begin to replenish that?
You're never, we're kind of setting like a target level that you don't want to go below.
Right.
So you gradually go down and, to that level, but we don't anticipate you're going below that level.
Right.
So you're never going below. And then it's something that, as your operating costs increase in the future, maybe you have Chrome 6 or something, that target would gradually creep up. So you want to keep on top of it in future years as well. So it's a little bit of a moving target that gradually increases over time to keep up with the costs of operations and stuff. But you never go below it. It's just, hey, we're drawing down reserves, but no, we're not drawing them down below that minimum target level.
Okay, thank you. And then secondly, I just wanted to mention regarding borrowing, and just to add to what you said, Alex, scenarios 2 and 3 were generating the same revenue. So all you're showing is how things would play out if we borrowed versus didn't borrow. And the debt service number you used is based on what % loan?
Oh, yeah, I think we used like I'm forgetting off the top of my head here.
4.6 or something?
Yeah, we wanted to include something that was a little bit higher than the current interest rates. I'm just trying to look at, let me take a quick look at scenario 3. And I could probably tell you 5 million, and we have about 325,000 of debt service, so maybe we assumed like, like 4.75%. I have it, documented and not at my fingertips here. Maybe like 4.75%, 30-year financing, something along those lines.
Yeah, ballpark is fine.
Right now, interest rates are actually a little bit lower than that on the bond market. If you got SRF, it'd be even lower, but who knows where rates are going to be next year. I mean, rates have been creeping up a little bit here and there, and they could change pretty quickly sometimes. So we wanted to include something in there as a reasonable approximate. So I think it's about 4.75%, 30 years.
It's actually,
Yeah.
I'd call it conservative based on today's interest rates. So I think
Yeah.
that's better
Yeah.
to be conservative. But I did want to reiterate one more time, and I know we'll have future discussions about this, but I think it's important. I think we all tend to be on this board and staff have some trepidation about borrowing and do not want to do that unless we have to, or there's a very good reason to do so. But that said, if we, as you've pointed out before, and we've had discussions about before, there are circumstances where borrowing money could be smart, because if we were able to get a very low-interest loan through the state revolving fund and a grant, we could actually end up making money in the deal when you consider the construction costs are going up faster than the cost of living index. So, and it would also allow us to replace a lot of pipes sooner, and we certainly do have a real problem with leaks. So I'm not being an advocate for going out and borrowing money tomorrow after our rates are in place, but I think it's important that we make a smart decision about that and don't just unilaterally say, we're not going to borrow money. That's not a good idea.
Thank you. Now I will open it to anyone from the audience who would like to ask Alex a question. Many of you were at the CAC, so you've already done that, but are there any questions for Alex or comments?
I have a comment.
Yes, would you go to the mic, please, so that he can get you on tape? I know.
Get used to it, Gail.
Everybody hates it.
I just want to thank Alex because a lot of times when I've heard presentations from different people, I have no idea what they're talking about. And I just want to say that you used language that I could understand, and anything I didn't, you did take the time to talk further, and I feel like you gave us a very good understanding of everything, so thank you.
Nice.
Yeah, Alex is absolutely, he's the best. He's been doing it with us for a long time, too. That's true. Thanks, Alex. Okay, anything else? Thank you, Alex. I know you
Thank
need to
you.
go on where you're going on to, but thank you very much.
We'll keep it going. Thank you very much.
Thank you, Alex. All right. We're moving on to item number 10, solar feasibility grant application and resolution number 17-981.
Okay, so at the last board meeting, or the one before that, I forget, Director Hunt brought the idea of going to the state for a grant. I can't remember if it's $20,000 or $30,000 grant. $20,000 grant to work with a company that the state uses for a feasibility study to see if it's feasible for us to put in a solar installation to offset our costs of electricity. And it's a requirement of the California Energy Commission before when we go in for this application for the money, that the board has to have passed a resolution that authorizes the general manager to send in the grant application. Fairly straightforward government redundancy effort. So this resolution is basically saying that if the district gets the money, first of all, the general manager is authorized to apply, and if the district gets the money, they will do a feasibility study, which we will do. So my recommendation is that you approve the resolution.
Any comments on that before we take a vote? Rebecca?
I'm all for it.
Yeah, we know where you are. Tom?
I have nothing additional.
Any public comment? Mr. Marquez?
Alvin Marquez, Central Community. On this resolution that you're talking about to analyze the solar potential project, Mr. Director Hunt at the previous meeting stated that the solar project wouldn't be at each location where the district has its power units, and it would have to be purchase some land or land that the district already has to have a solar project there to sell the solar energy that comes out of that to Edison, and then Edison in turn would sell it back to the district at a reasonable amount and be cost effective. The community is in favor of solar projects for the Morongo Basin, but to have solar fields like the commercial ones that is already there in Sunfair, the one that wanted to go there at the Joshua Tree Airport, which has been stopped for whatever reason. But I like to refer to the county general plan, and this is the current one. And it states there for solar projects in the community that they would like this would be GTCO4, which is conservation information, and it says encourage use of renewable alternative energy systems for residential use, not for commercial use. And the same is on the community plan, states the same thing. Now, right now in Joshua Tree, we have rooftop solar at the JT Elementary School, the San Bernardino County office building, and I presume, I'm not sure, but I presume that High Desert Medical Center has some solar, also a rooftop. the Copper Mountain College has a wind turbine out there that they're using. And the community is not against a solar project for the Joshua Basin Water District, but not a solar field. And if the district can find some kind of arrangement to have rooftop, like say for the district office, and make arrangements for some kind of solar for each of the well sites, the community would be in favor of something like that, but not solar fields for industrial use. Thank you.
Thank you very much, Al. Anyone else? Seeing none, do I have a motion?
I move that the board approve resolution number 17-981, which allows the district to apply for grant monies for a feasibility study for solar.
Is there a second?
I'll second that.
Okay, we'll take a roll call vote. We'll start with Director Under,
Aye.
Director Hunt,
Aye.
Director Flone,
Aye.
and I'm an aye. So it is unanimous for those of us who are here. Thank you very much. Congratulations. We're moving forward. Item number 11, hazard mitigation plan and emergency response planning. Mr. Sauer.
Okay. Excuse me a minute. So our recommendation is that the board direct the general manager to ensure completion of the plans that I'm about to talk about. So in order for us to prepare for catastrophic events, the district needs to revise its existing emergency response plan, as well as completing the hazard mitigation plan. We're in the process of updating the emergency response plan. We have utilized the Cal Rural Water Association template, which is approved for this state, and there are other templates in other states, but it's not a full-fledged emergency response plan as required in order to meet the state of California standardized emergency management system and the Federal National Incident Management, NIMS, reporting criteria. But we will get there. When we do, we intend to retain the services of Mr. Gary Sturdivant as the lead on the emergency response plan. He has written them for High Desert and for 29 Palms. The cost for those is someplace in the vicinity of $19,000. However, we have received a quote from Mr. Sturdivant, because he's left the company he was with and started his own company, for about $9,000. But that's second priority. The hazard mitigation plan is the top priority, and I'll explain to you why. In order for the district to be eligible to compete for and receive mitigation funding, grant funding from the state, we need to have a hazard mitigation plan. So the way Federal Emergency Management Agency works is every time that there is a nationally declared emergency in the state in which you reside, they figure out what the costs of that are, and they take basically 25% of those costs and put it in a mitigation fund that they send to the state. And any government agency in the state can apply for grants under this mitigation fund. So there were, as everybody will remember, large fires in Northern California. There were 3 emergency federal declarations for those fires. So there's going to be 3 separate 25% amounts of money put into this mitigation fund. And now with the fires down by Ventura, I don't know if it's going to be a federally declared disaster, but certainly looking that way. So there's this money that's sitting in the pot, but without a hazard mitigation plan, we can't put in for grants. So what would we mitigate for catastrophic prevention of damage for catastrophic events? We have 2 tanks that have seismic valves on them, so when there is an earthquake, they shut off and keep the water there. 3 of our tanks do not have that. we don't have our tanks tied down. All of our tanks have vents on the top, but it's been demonstrated in several different earthquakes that when the water starts moving back and forth in these tanks, it doesn't go out the top, it just warps the tank, or it lifts the tank off the ground and puts it back down. So just in that example, we could put together grants for seismic valves, tying down the tanks, and retrofitting the top vents. So the way the grant works is if you have $1 million worth of projects, they will fund 75% of your project as a grant, not as a loan. And the district has to come up with the other 25%. Hence, as we spoke at the Citizens Advisory Committee today, another good reason to have an adequate level of reserves, so that if you do get $750,000, you can fix your tanks. So, the hazardous mitigation planning process requires a working group of staff, citizen input, some public meetings, and Gary will coordinate with staff and make sure that those are all done, that the information's put out on the website, that there's public announcements, etc. And he will write the hazard mitigation plan, and then it'll take about 6 months. Then it goes to Cal OES, where it could take up to a year. And then Cal OES, once they approve the plan, there may be some interactions with the district to change things that are in our draft hazard mitigation plan, and Gary would handle those. Cal OES then sends the plan to FEMA, and they will approve the plan, and it will take them approximately 6 months. So this is a 2-year process. The cost to retain Mr. Sturgeon to do this work is $14,000. And he has written hazard mitigation plans for many water districts throughout the state of California, and has worked in the water industry for over 20 years. So it's a full 18, 24 months before the plan gets approved, and then we're going to be able to put in grants. So, it's 14,000, so it's underneath the limit on my authorized amount to approve, but I wanted you all to know, this $14,000 is not going to produce a $1 million grant 6 months from now. It's going to be a 2-year process, 3-year process. So whomever might be on the board and whoever might be on staff needs to keep that in mind, and once we have the HMP, we make sure that we go ahead and apply, and it's important that the board understand the process, so that when we do come back to the board and say, hey, we just got approved for $1 million, we need $250,000, the board doesn't say no. Okay? Just pointing that out. So that's basically, we're going to do the HMP, probably take about 6 months.
Excuse me, would you give the words for that, please?
Hazard mitigation. Hazard
You've
mitigation
dealt
plan.
with this a long time, and many people have not.
Hazard mitigation plan.
And the OES?
HMP. Huh?
The OES
Office of Emergency Services.
and FEMA.
Federal Emergency Management Agency.
Thank you. So,
Alphabet soup.
yeah, yeah.
Well, it comes from the federal government. So
Thank you.
that's basically what we're doing, and who knows how many millions of dollars in grants we're going to get, but it's an upfront cost of $14,000.
By the way, I speak federal government, so I understood it perfectly.
I
And I'm always available for interpretation if need be.
They have him behind us with a sign that says, what he means is. Okay, perfect. Do I have, is there any public comment on this? Any comment from the board?
Kurt, this is a 2-year, could be a 2-year process. This will be a process that will outlive your employment with us.
Maybe.
Your contract.
Depends on how exciting things are with the rate study. And I would go back to, all the directors have commented, and so has the public. We implement this rate, we have to perform. and
That's right.
that's going to be a fun challenge. So,
Well, sounds good.
Gary?
So in order to apply for grant funding from one of those pots, I assume it has to be an emergency that's declared within our geographic area?
no, it has to be a federal disaster declaration in the state of California.
Really?
Yes.
I was hoping you'd say that. That's surprising to me, but I was hoping you would say that.
And,
Wow.
you know, the concept behind it with the Federal Emergency Management Agency, also known as FEMA, is that when you had an earthquake 25 years ago, 26 years ago in Landers, whatever, those districts that lost pipe and lost tanks, if those tanks had been tied down, retrofitted so that the water would evacuate rather than slosh back and forth, there would probably not have been as much damage that the federal government has to pay 75% of through FEMA. And so they're, you know, it's like flood mitigation. They would like to move people out of floodplains in Louisiana. That's not working so well, but, so yeah, if it's a federal declaration in your state, it's available for the entire state's agencies that are eligible to apply.
That 25% of the total that goes into the state pot.
Yeah, so if there's a $100 million federal disaster, there's $250 million going into the mitigation pot that we would be able to compete for.
Wow.
Tom?
A while back, we all attended a disaster preparedness presentation type of a thing at the Helen Gray Center that was presented by this Gary Sturtevant person. Significantly, I thought Kurt was there, but what I was pleased with was that Randy Little was there. He's somebody that works on the outside. He actually handles a lot of this stuff, so he got a full sampling of what the potential is for us in the big one, which 8.2, I think, is a possible number for that. And listening to Mr. Sturtevant's presentation, I got scared. And I'm a believer in this, and we need to protect our water so that we can deliver it to folks, because he said that it's not like 4 days supply you have to have, or 7 days. He said 3 months.
Yeah.
And he described what the scope of what a 8.2 would be, 50 miles on either side of the San Andreas Fault. The thing would happen on the north end of the Salton Sea, and it would go up 50 miles on either side of the fault, and it'd go up 200 miles. And bridges are going to come down, which means our supplies, our relief, and all that. You know, you can also wonder, are we going to be a priority up here on this little plateau that we're on, or is all the money going to go to Orange County and Palm Desert and all that kind of stuff? So anyway, I'm for this kind of thing.
Thank you very much. Anyone before we take the vote? Do we have a motion?
Well, yes. I move that we receive information on developing a hazard mitigation plan and emergency response plan.
And direct the general manager.
To proceed.
Yeah.
Direct me to proceed.
Okay, is there a second?
Second.
We'll do a voice vote. Director Unger.
I think it's best practices, aye.
Director Hunt.
Aye.
Director Plum.
Aye.
And I'm an aye. 4-0. Done. Let's hope that the 8th doesn't come too soon.
Yeah, it's gonna be scary.
All right, we will move on to the district general counsel report.
Madam President, I have no report.
Thank you. Mr. Sauer, general manager report.
Well, I have lots of things. Okay, I just want to keep the board informed and the public that's attending and listening. So just so you all know, the county mental health facility, originally, they were under the understanding that they had to be done by December 31st in order to get their grants. they're not going to make that, and they've reached an agreement with their lawyers and whoever else, other party has the grant monies. As long as they have shown substantial movement towards completing the project, they're going to get the grant money. So their target date for completion now is March. There's a new project manager about 3 months ago. He and I have had very good conversations. The superintendent is working well with the Director of Water Resources and staff, and we're good to go as far as supporting the activity. Backflow devices. I want you to know that we have about 13 property owners with backflow devices that have not maintained their annual inspections. I was told by staff that about 2009, staff had been informed that we were not going to shut off water to people that didn't maintain their backflow devices, therefore thereby putting our district at risk. I intend to send these people letters, giving them another 30 days to service and maintain their backflow devices, or I'm going to shut them off. And that's legal, Mr. Granito.
As long as in the rules and regs.
Okay, so, but here's the deal, right? We're going to work with them. The cost of an annual inspection is about $35. If repairs are needed, it could be, $200, whatever, to get your backflow device functional. 3 of these properties are trailer parks. We have located in the last week someone at the state, because it's the State Housing and Community Development Agency that licenses the trailer parks. And the program manager for these mobile home parks has been exceptionally helpful. I spoke with him on a Thursday, I emailed him on a Friday, and on Monday he called 2 of the 3 trailer park folks, and that day received notification from the managers of the parks that they would get their backflow devices done. Another interesting thing is we've been mailing letters to the 2 parks. They've received 3 different letters advising them that they needed to do the backflow device, but they had changed their mailing address and never notified us. So it wasn't coming back to us. So we are double checking all these others and making sure that the information we have is correct. Another fun one, which Kathleen will enjoy, is the Chamber of Commerce has a backflow device on Turtle Island. We also have a 5-year agreement with the Chamber of Commerce for them to get up to, I think it's 1,000 units a year. They're using like 50 units or less each year for the past 5 years. That agreement is expired, and I was working with the former executive director in the spring. He informed me that he was going to be gone for a while, and we agreed that we would just leave the agreement, and come fall, we'd work on it. Well, he's not coming back, and they have a new executive director. That executive director has, I've heard third hand and haven't heard back from her directly by email, that since the agreement is expired, the Chamber of Commerce isn't going to test the backflow device, and it's the parcel owners over in Turtle Island that need to take care of the issue. So rather than go, oh, it's like, I need to know who, other than the executive director, like the president of the Chamber of Commerce or whoever that might be, and/or talk to the property owners that along Turtle Island, and then you get into the regs and say you can't have a meter that services more than one parcel. That's why the district went with an agreement with the chamber. So if we can't use the chamber, then the rules and regulations come into play. And I tend to think wild things when I'm driving around various places. I'm thinking, I'm thinking, just throwing out there, maybe it becomes a district-owned meter. But then, if there's a leak on somebody's private parcel, who's responsible? Because it's our meter, but the water's going out through all these private parcels. So anyway, since I hadn't heard back from the chamber as of Monday, I had the meter locked. No big deal, it was closed anyway. But it's just another one of those little things that we need to be working on. And if you hear that the water district has locked the meter, it's because of the backflow device.
I have a question.
Yes, you may.
I knew that this would get it.
Go to the, just so we get it on tape, sorry.
Yes, sir. I wondered if, does that mean that no water is going to the plants on Turtle Island right now?
At the present time, I do not believe there's any water going to the plant.
Thank you.
And I think that everyone needs to know that Turtle Island, each section of it is owned by the business on the other side. So it's crazy.
There's been almost no water use there for a long time. Okay.
There was a catastrophic leak there,
Well,
and
it
I
was a
think...
large leak.
Largely not catastrophic.
Mr. Tuttle.
Kurt,
Yes, sir.
okay, I'm gonna play water district for a minute. I have a backflow problem. That is priority, okay? I don't wanna turn off your water. I'm gonna replace your backflow, and I'm gonna bill somebody. Whether it be all the individual property owners, but my suggestion is fix the problem. But worry about the money later, because that's important, and now we're having issues, and we don't need that kind of problem. Let's just fix the problem, and we'll deal with the litigation of money other ways.
And if I may, Madam President,
Thanks, Steve.
there is not a current backflow issue at Turtle Island. It's a backflow prevention device. So the potable water system is safe. So just so you understand, this is part of Article 8 of our rules and regulations, and that's the next step. But that's an interesting concept, and obviously the manager will have to consider.
Okay.
Thank you, Steve.
Okay, well, that was fun.
Anything else on this? Do you need any action? You don't?
No,
You're
just-
just telling us about it?
Yeah, and I don't need any action on the next one that I'm gonna cover, but I brought my props. And I wanna share this with you because it kind of indicates where we are with infrastructure and meters and MXUs, et cetera. So Randy didn't know he was gonna do this, but would you hand me that 505 over there?
Yes.
Okay, and hand me that brass meter. Okay. Safety, if these things fall, don't try and catch them, because they're heavy. Okay, so back in the year 2000, I'm gonna move my phone. Back in the year 2000, we replaced all of the district's meters, right? There were about 4,000 of them. It was done in about 2 months, right? And we've been talking in the rate study, and we've been talking for a lot of time, that these meters, their life expectancy was 15 years. And they need to be replaced. They were originally connected to what's called an MXU, which is a transmitting device, the 505 series. So we had about 4,000 of those. We currently have about 2,900 of them because 1,100 of them have failed. These devices were designed with a life expectancy of 5 years. All right, now, you can get into the discussions about planned obsolescence, so the companies make more money and whatever. But 3 years ago, we kept them running up until now by replacing the batteries, which is not something that you're supposed to do. But this district in order to save costs, reduce costs, has these MXU 505 series that we've kept 2,900 of them operational by going out and replacing the batteries. 3 years ago, 55 of them failed. 2 years ago, 85 of them failed. And last year, approximately 220 of them failed. All right, so we've got 2,900 of these puppies, and they're failing. So as part of our regularly planned budgeted activity, we've got money to replace about 200 of them. All right. So as they get replaced, the 505 MXU is being replaced by the 520R MXU, okay? So, we've been reading these meters since 2000 with something that's called a 3500 series VXU. Well, we only bought one of those 17 years ago. And in 2012, I think it was, Susan and Keith and whomever else was involved in that, we located another VXU from Mission Springs that they sold to us for like $100, $200, because they were getting rid of theirs and going through it to a different system. That backup has failed. The Keith has gone to the company. They don't repair them. There are no schematics available for them. And so the VXU, which is in Val's truck, and she drives around the district and gets within about a quarter mile of all of these meters, and their VXUs, is on its last legs. So last week, we met with the representative of Census, actually Octometrics. Lo and behold, there's a 3600 series VXU that he'll sell to us for $18,000, which is a very good deal. The original VXU 3500 in 2000 cost the district $30,000. So the technology has changed enough that it's now not $30,000, it's $18,000. And if we don't buy that, and it's underneath my $20,000 limit, so I'm just sharing with you that we are going to buy it. If it goes out, we have no way of reading some now 4,500 active meters. And we would go back to an emergency manual read, which we're not going to do. So we have solved this first problem and only need to spend $18,000. But wait, there's more. Okay, so we've got $30,000 in the budget. So we still have $12,000 in the budget, right? All right, so because these puppies are failing at about 200 a year, or we need to be prepared for it, and we also have a meter testing replacement program of 100 meters a year, we need 200 of the 520Rs. However, and that's only $28,000, and that's budgeted. All right, the 520Rs transmit at a certain frequency. The company has actually acquired a different federally licensed set of frequencies, and they actually went out and bought another company just because that company owned those frequencies. And they are, in June of 2018, they will cease making the 520Rs. And they will make the 520Ms for $10 less. However, the 520Ms cannot be read by the VXU 3600. So we will need to buy a VGB MXU, PDQ. for $18,500, okay? Now, we just met with them last week. We asked them to give us a quote, which we received today. And basically, Keith, you're going to have to help me out here unless it's printed out. Okay. The Series 3600 VXU for $18,000. The VGB for $18,000, $36,000. Their quote includes
a handheld device to program the meters, and the command link to program the registers, along with 25 iPearl meters and 25 520M radios.
for,
$42,000.
so we're getting a reduced rate, and we haven't firmed up what we're going to buy yet. But staff has met several times on this, and we could buy a lot of the 520Rs, but it racks up a lot of money, and if these fail at 200 a year and we buy 600 of them, that's 3 years' supply, but each one of those is $140, I think it is.
Yes.
So you rapidly, you got inventory, but if we decided to go to AMI instead of AMR type registration, which I don't think we're going to do, then you've got all these 520Rs in inventory that you're not going to be able to use. If you change a different meter company, you're not going to be able to use them. So each one of those individual purchases is underneath the $20,000 general manager limit, and we could have just done it, but are we having an emergency?
Yeah.
Yeah, winds, severe wind.
Okay. So, but I want the board and the public to know that for years now, this district has been struggling with a VXU 3500 series with no backup. We have found a solution to that, but it doesn't make much sense to us to continue to buy the 520Rs when come in next June, July, all we're going to be able to buy to replace these is the 520Ms, so we kind of need the VGB.
So,
And please do not ask me, Madam President, what VGB stands for. I know FEMA.
I don't care. So when are we planning, when are we budgeting to replace all the meters? It's got to be sometime soon.
5 years.
5 years from now?
No.
Over 5 years,
Over 5 years.
a fifth. So
Right.
1,000 meters a year.
And we're planning that as of this coming year?
It's in the
It's in
rate study.
Because
Depends on
I mean, whatever finger you put in that dike to hold it for the next 5 years works for me. I don't know about anybody else.
So I just wanted-
Opportunity to speak.
Yes?
What I've heard in a couple of places, and I can't put my finger on all of them, other than Aqua was one of them, was that the state is becoming interested in water loss. So they know,
Probably, yeah.
because we're measuring what comes out of our wells, and we're measuring what goes through the meter at a ratepayer's home or business, whatever it is. And so the numbers are all there, and if there's a variance, along with other kinds of pipe leaks and stuff such that we may have that's mysterious, if they see these kinds of numbers, they can actually put a pressure on us to do something right away, or they could fine us or do other kinds of things. So this stuff isn't just locally originated. There's people higher up in the government food chain here that are developing an interest in water loss. And what we learned when the folks had the, I can say their name, but I won't. They had the $4,000 water bill or whatever. Some months ago, you contacted the maker of the meters, as I recall. It might be that Aquametrics.
Yes.
And he told you that as these things fail, that they fail in favor of the ratepayer or on the property. And so here we're showing a level that's being pumped, and we're showing a level in the meter going out, and there's this big variance. In other words, we might show 5 going out, and the meter shows that he got 3. Well, where'd the other 2 go? That's a water loss. And they could come after us on these kinds of things. So I personally would think we need to move forward on solutions to this kind of stuff before somebody comes and starts prodding us from behind to do something that we should have done on our own in the first place.
Right.
Thank you.
And I want the board to know that the district is doing a system-wide water audit every year. We're familiar with the state's requirements. Randy and Ann spent a lot of hours working with a special work group. So you're right, and have we recalibrated the distribution, the pump meters?
Yes, we have. The Senate Bill 555 speaks to the M36 manual for water audits, which recommends that master meters, the ones that at our well sources, are calibrated within 3%. And so this year was the first year. The variance for our M6 manual was 5%. And so now it's in more conformity with really very close to what our customer meters are designated. And once again, it's just technology as they get improved and what the state's requirements are. But yes, it's a lot tighter window now.
Yeah, so we are paying attention to the water loss issue. You know, it's 18, 20%, 14%, 20% every year. We also have Cal Rural Water Association through a grant through the Mojave Water Agency is planning to come in and survey an additional portion of this district for water leaks. And also, these little registers up here, okay, these meters, we've tested about 150 of them, not statistically significant. Gary will be happy to know that I brought that up. But the ones that we're testing, 90% of them are under-reporting by 2 to 4%. 2 to 4% is not that much. It's only $100,000 in revenue a year. But as they get older, they under-report more, right? So you need to replace the meters. These registers register the amount of water that's going through the meter. We have 48 of these that have failed. So last year, we started replacing these and not the meter, so we had a new register for $65 on an old meter. And the new meter has a register that's internal. So as we get the meters replaced, the registers will be registering more accurately. And so we're attempting to address water loss. And also, this guy had a 5-year warranty. The 520Rs have a 20-year warranty, and the 520Ms have a 20-year warranty. So all of our 520Rs that we have put in, some 10 years ago, if they fail, there's a warranty. Now, it's not after 10 years, it's not a 100% warranty. But the 520Ms that we're going to buy have a 20-year warranty. And when these guys fail under warranty, we get a 520M, which has a 20-year warranty. So if we work it right, we'll never have to buy another MXU. We just get all the warranty ones to fail. So anyway, I just wanted y'all to know that, and I thought it was a great solution that staff came up with.
You know, something related to this, I wanted to say that when we replaced the batteries on these, it was $18. This is $140, so it was a significant savings that gave us triple the life on these. The second issue is, this is one of those areas, and each group of meters that we test again gives us more data, so we get closer to that statistical, that statistically relevant sampling. This might be an area where, once we pull all this information together, we do want to borrow money. Imagine if we find out that meters are actually recording less interest rates are low, we could be losing 10% of revenue, which makes borrowing the money to replace all the meters sooner rather than later a better option. So something to keep in mind as we move forward with this project and we get more information.
You guys have done a great job with chewing gum and string.
Excuse me? Gary?
Sorry.
Well, comment first, believe it or not, I think I understood all that. But one VGB, and you mentioned having one of the other devices, one VGB for the new, whatever it was, 520M or whatever. Do we need ultimately, should we have a second VGB on hand as backup?
I think we should.
Okay.
Once we make the final determination as what meter company we're going to go with, if we're going to stay with Census, then yes, I think we should have a backup.
Okay.
Certainly not wait 12 years to try and find one.
Right.
But we shouldn't buy that now until we decide which meter company we're going with.
Okay.
Because the other meter has a different frequency.
Right.
So you're going to have to replace all the MXUs.
Right.
So it's quite convoluted. See you later, Ed. Okay.
No luck.
Oh,
he wants to talk.
he wants to talk.
Oh,
Okay.
you want? Well, let me finish the board first. Director Ungley.
Yeah, you guys are very impressive, making do with very little. But Susan, your point is absolutely, and that's where I thought all this was definitely going, so that we need a long-term solution.
Okay, and I have a comment, and then you can go. When you're looking at new meters, are you looking at the ones that give you so that people can look at the site and see what their water use was yesterday? I mean,
To an AMI.
as a customer, that's what I would want.
That cost is exponentially more than the $2.5 million cost that we have.
Is it really?
Yes. A whole lot more information, absolutely, for both the district and for customers. It has an ongoing cost that is much greater than this one-time, upfront cost. You have to maintain those towers. You have to have lots of towers all over the district. That's that's AMI versus AMR is automatic meter reading, I think is what that stands for. AMI, automatic meter infrastructure or something like that. AMI is the much more complex system which gives, readings. Customers can link to this with smartphones and, see what's happening right now or, that sort of stuff. Substantially more cost to the district. We haven't had a lot of requests for that sort of, information from customers, and so we haven't felt that it probably justifies it at this point. Certainly, the next go-round, when we replace meters 15 to 20 years from now, I think that's absolutely something that will be required in this community, will be wanted, and the value, will be there.
It'll probably be cheaper at that point.
Absolutely.
Yeah.
18 versus 30, right?
Right.
30,000 the XU.
Thank you very much for that. I'm disappointed, but thank you.
Just a couple quick questions. Are you going to take some large volume ones and put them on your major trunk lines to make it easier? If you got a leak, I had a leak in 29 Palms, 2 feet from the box on Utah Trail, and I had over 250,000 gallons of water that wound up leaking, which gave me a considerable bill, to say the least. But if someone had, if you knew that there was a trunk lines and you were getting the trunk input, say on 6-inch lines or 8 or 12-inch lines, to know how much water came, one, it allows you to isolate where you have a problem. And in my case, the sand was very sandy, so the leak, the water was going down. There wasn't a great big puddle on Utah Trail. Just a thought that maybe you can detect future leaks just by reading your large main trunk line ones too, even though it isn't going to a meter, an individual meter, on a regular basis, to see if you have some large variance. And another thing, the old-fashioned ones, that were not electronics, had a little meter thing that depended upon how fast it was running. The owner could turn everything off, and he went out there and saw this little thing running.
These have
You
that.
knew you had a
Yeah,
leak.
These have that,
The new
too.
ones also have
Yeah.
The new one does?
Leak
Okay.
detector, yeah.
Okay, yeah. So just a couple questions, or, maybe something that's worth considering, putting large trunk ones on to detect major leaks, especially if we're going to get fined, because then you can isolate and go right to it quickly.
Right, okay. So I think we already have that in place because our SCADA system will show them, we know the pump is pumping, and the guys are looking, and that, they know that that pump is pumping to that reservoir. And if that reservoir isn't going up comparably, they're going to catch that. But it's something that we'll talk amongst operations. But wait, there's more.
Anyone else? Anything else?
Well, on other, I can have a couple other things.
Yes, sir.
Okay, so, well 14. I'm going to give the board a complete report on December 20th. We've met with the Division of Drinking Water. We have a plan in place. For the past week, we've been putting together a protocol with Dudek Engineering and Michael Schneiders, the microbiologist. That is supposed to be final Friday, we hope. We're going to put a bid out to 4 different companies to have the well treated and pumped. And if that works, we're putting it online. And if that doesn't work, we're also in the process of designing a 4-log treatment system, which will be installed on site at well 14, some roughly 600 to 800 feet of line, depending on the diameter of the pipe. It'll be chlorinated as it comes out of the well at a lower rate than we currently chlorinate the system, right? Goes through this detention facility for contact time. It's measured before it's released into the distribution system. It's been utilized at Big Bear. We went and visited Big Bear. It was suggested by our sanitary engineer, Eric Zuniga, to Big Bear. When he found out that we were interested, he was very happy that this could be a backup. I don't have the prices yet, but that's the plan. And we're going to get our well that produces 60% of our water back online. Okay, so recently, because of the rate study, there's been a few concerned customers that have expressed an interest in having the district reduce costs. And we welcome those suggestions. But I'd really like to get the suggestions on how we can reduce the costs, because I want you to know that this district, in a kind way, I will say that when I came here, I was amazed at the penny pinching. I mean, it's down to a science here, and staff is like, they do a great job. And I'll get into some of those, but in the November billing, we sent out a little mailing, and I wanted to remind the board. Then Kathleen worked with Susan and other members, and in the past 5 years, this district has reduced costs by $868,000 just in these items that were mentioned. Grants, we got rid of the national lobbyist costs for $32,000 a year. Instead of $80,000 for the district air conditioning, it's $40,000, although that's going to be some more come spring. Because 50% of this building's attic is not insulated, and it's not up to code. JPIA insurance safety incentive savings of $15,000. The improvement district early loan payoff, $19,000. The executive administrative assistant position was unfilled for 2 years, with all that work absorbed by staff for $140,000. The human resources position was unfilled for $100,000. Those have now been filled. Board committee meetings were consolidated to less days. an $8,000 savings. The Consumer Confidence Report is no longer mailed, it's posted on the website. We've been doing that for 3 years for savings of $12,000. We have received $250,000 to date from the state from our grant for chromium-6. So all the planning that we've been doing on chromium-6 for the past 2 years has resulted in no cost to the district. We've also, because we worked with the Bureau of Reclamation initially, and still will be when they're done with Norman, Oklahoma, they've incurred costs of $200,000 for the Bureau, or for the chromium-6 studies. And that's not just here, but they're using our information along with studies in Norman, Oklahoma and other places, because chromium-6 may become an issue if the EPA changes the chromium-6 rules and regulations. So there's several examples. And additionally, the district's reduced costs over the past 20 years by not completing operation and maintenance on many parts of the system. For example, you'll remember that the K Hydro Plant, pneumatic station, there were 3 pumps that were 25 years old. The district staff had made them continue to work, even though it's a 5 to 7 year life expectancy. One of the pumps was not operational, and one of them was on its last legs. They stretch it as far as they can. We've replaced those pumps instead of 5 to 7 years, incurring that cost some 20 years later. So lots of costs have been reduced. Until now, you have a system that's in need of many repairs and maintenance. So that's why we're having this rate study and the rate discussions. Also, on Thursday, I'll be attending a TAC meeting, or the Technical Advisory Committee meeting at the Mojave Water Agency. And the purpose is to take our primary mainline replacement project out of the CIP and get it into the IRWMP, the Integrated Regional Water Management Plan for the Mojave Water Agency, so that we can then go to the state for a $400,000 grant. And we are also putting the meter replacement program into the Integrated Regional Water Management Plan, so we can also go to the state for a $400,000 grant. So if we get the $400,000 grant for the meter replacement, instead of having to spend $800,000 in the first 2 years of our meter replacement program, we, the district, the ratepayers, would be spending $400,000, and there would be $400,000 coming from state grants. So I just want to emphasize to the board and to the public that the employees of this district have gone and continue to go well beyond when it comes to trying to save money and reduce costs. And I would sincerely invite any customer that has concerns about reducing costs to come and bring us the ideas and let us talk about it. We can't think of everything. So if you have some ideas, I'd love to hear what they are, and if they can work, we'll implement them. And the last thing is, I just want to remind the board that the general manager's annual evaluation is due in March. So you might want to be thinking about that in the next couple of months, and that's the end of my report. And I would echo Susan's comments on Ann.
Yeah. Thank you very much, Mr. Sauer. We will move to item number 14, Director Reports on Meetings, Attendance, Comments, and Future Agenda Items. First is the Mojave Water Agency Board of Directors meeting. That was mine. And the only thing that was really of interest at that meeting to us is that, actually, this is not of interest to us at all, but it was interesting to me. They are working with the county on a project to take a flood control pit that the county is digging somewhere along the Mojave River and using it for storage of water in addition to having it be a flood control project. Dual purpose for the same project, which is really quite exciting, and they're very I mean, they're working to cut costs as much as anybody else, to multiple uses for things, so, and that was the only thing that was at that meeting. Finance Committee, Director Colon, do you want to say anything since Director Johnson isn't here? Did you even have one?
We had the one where we did the audit thing.
November 20th, that would have been November.
Oh,
Yeah, the audit thing was the last.
well, we discussed the audit. It was, we discussed it in depth, too. I think we went over about 20 minutes or so, the scheduled time of the meeting. So it wasn't as if we just sort of scanned things. The directors look at this stuff for a while, and we discussed stuff with staff at those finance meetings. And one of the mysterious things that we spent probably a half an hour on, and staff was helpful on that, was this deferred inflow and outflow of funds kind of stuff. And I'm still working on getting my head around that, but it was an excellent meeting, and I loved every minute of it.
And you're all welcome to come. We're actually looking at changing the meeting times a little bit, but I'll get to that in a minute. Public information, do you have anything? You said you didn't?
I am going to reassure everyone that at the next board meeting, I will have a full report. Thank you.
Thanks, Kathleen. Okay, future meetings, the TAC meeting, Technical Advisory Committee, Kurt mentioned that, that's mine, and I go to that tomorrow. The Mojave Water Agency Board of Directors meeting on December 14th is Vice President Johnson. Better check and make sure he's able to do that. And the Finance Committee and the Water Resources would normally meet on December 18th. And I'd like to change the date of that to the Wednesday before. Is it next Wednesday? It's the Wednesday before the next board meeting, right?
Right.
So it's the Wednesday in between, it's the second Wednesday.
Right.
So if that works for the committee members, because it doesn't work for Director Hun, who is now on the Water Resources Committee with me. Vice President Johnson is going to be off of that. So the finance will be Vice President Johnson and Director Flowen, and Water Resources are me and Director Hun.
On the 13th of December, not the 18th?
Is that a Wednesday?
Yeah.
Okay, so
For both of those meetings?
No,
Yes.
it would be
It's on the 18th.
Because the board meeting's on the 20th, so it would be on the 13th.
He wanted to change it, so.
Yeah, the 13th. Does that work for you, Mr. Sal?
Certainly.
Okay, so those are both 13th. Anything else for good with the order before we adjourn? Any motion for adjournment?
I had an awkward report, but I will move the adjourn.
Okay, is there a second?
second.
All in favor?
Aye.